Hi, welcome back to Joe Blogs. In this episode, I want to talk to you about the artificial intelligence shares that I bought on the 3rd of September. If you've been following the channel, you'll know that I posted that video on the 3rd of September. I went through all of the different shares that I'd purchased. There were 10 of them, and we went through all of the share prices. So in this video, I want to give you a 1-week update. This is being made on the 10th of September, and I've just taken all of the latest share prices. And I want to share with you what's happening because I'm using this AI algorithm to predict shares that are likely to move rapidly in value in a short space of time over the course of September. So I'll give you the 1-week update, and I can give you the heads up spoiler alert that if I continue on the same track for the rest of this year, or the rest of the next 12 months that I've done for the last 7 days, then I'd be on for a return of around 2,000%. So that's obviously quite a big number. Now, a lot of you have asked me how I'm doing this, how I'm actually using AI to predict shares. And I'm actually working with a very large company that's valued at around about 500 million. They've got around 300 employees. So this isn't me typing questions into ChatGPT and trying to find out which shares might go up by 1% over the next month. This is actually a huge database of every single share in the USA and over the world, and trying to predict which shares are becoming flavor of the month, which shares have things happening with them that means that they might skyrocket in value. That is the logic. Now, before we get into the details on any further information, if I could ask you to subscribe, please, to this video, because this is a different type of video to the ones that I normally make, but I'm looking to diversify to make more of this sort of thing. So if you're interested in this type of video particularly, then please subscribe, please like the video, please pass a comment below, because all of that helps with the algorithm. And if you're enjoying the show and you'd like to show some appreciation, then you can have a look at the YouTube super thanks or buy me a coffee. Now let's get into the details. So these are the 10 shares that I purchased on the 3rd of September. And these are the prices that I paid, all of which were detailed in the video that I posted on the 3rd of September. So you can go back and check it out if you don't believe me, if you think I'm making this up. And I had a stake of $10,000 for each of these investments. So you can see the number of shares that I was able to purchase in each of these stocks. So it varied quite widely because we had share prices ranging from $63 for Marvell Technology right up to $906 per share for ServiceNow. So it doesn't really give you an indication as to how well the stock's doing. It really just depends on how many shares they've actually issued and break down as to what the value is. So you can see here that the 10,000 that I put into each of those stocks came to $100,000 in total. And I now want to give you an update as to where we are on the prices. So these prices here, showing under the 10th of September, are the latest prices that I've just taken right now. So obviously, these are live situations. So these share prices may have moved on further up or down since I've actually taken these numbers. So you can check them out yourself. But this was the latest position as of making this video. And if I now move on and show you what that means in terms of the valuation of these shares and the holdings, you can see that we've had some really interesting movements, some really big winners, some really big losers. And this is really why it's important when you're investing to take a portfolio approach, because individually, every single one of these stocks had the potential to go up rapidly in value. However, as you can see from the right-hand side, from the profit and loss section, some of them have gone down quite rapidly. So what I'm looking for is to get balance in the portfolio so that basically the winners outstrip the losers. So overall, I'm making money. I don't actually care which ones go up and which ones go down. It doesn't make any difference to me. I don't have any emotional attachment to these individual companies. And I think that's an important thing when you're investing. Sometimes when you're investing, you can get emotionally charged and start thinking things like, well, I'll buy some Apple shares because I really like my Apple iPhone or my Apple iWatch, or I'll buy some other shares because I like using Zoom, the messaging service, or something like that. And then the problem that you have is, when do you ever sell those shares? Because you're always going to like those businesses. So I try to detach myself emotionally from these companies. So I haven't done a huge amount of research into what these companies do and why they will be going up in value. I'm basing my investment strategy on the AI algorithm that the company that I'm working with has put together and has spent millions of dollars developing. So they've put a lot of time and effort into the R&D and the technology to produce this information. And I'm working with this information. I'm not doing this analysis myself. But if we just run through the winners and the losers, Astera Labs, you can see, has gone up 25% in the last 7 days. That is a remarkable performance, particularly as Astera Labs was a company that I invested into in previous months. I've already made a double-digit return on Astera, so it's having a stellar 2025. Axelsys Technologies has gone up 5.3%. So that's done pretty well in a week. When you think most portfolio managers would be targeting maybe a 5% yield over a whole year, if you can do it in a week, then obviously that becomes a lot more valuable over the course of a year if you then take that capital back and then invest it into something else. Cadence Design Systems has actually fallen by 4.7%. So that's wiped out some of the profit. Marvel Technology is up 6.6%. Again, that is a really good performance in the space of a week, 6.6%. That is a good return. You can see that generated $661 on a 10,000 investment. However, the star performer over the last 7 days has been Oracle. So I purchased those shares at a price of 224, and the share price right now, when I just checked it, was 338. So it's gone up by 51% in a week. Now, that is an incredible performance. Now, I did actually have a look into what's going on with Oracle, and they're in the AI space, and they've come out with some extremely good news. The market was very impressed with their results, and so it's risen rapidly. And the reason it's rising so rapidly is because AI is flavor of the month. So any company that seems to be doing well in the AI space suddenly takes off. We look at ServiceNow, it's up 4.1%. Again, individually, that is a really good performance in the space of a week. However, Synopsys has been an absolute dog. So you can see that over the last week, its share price is down by more than 33%. I purchased that at a price of $589. It's now trading at around $392. And again, that was due to results that have been released for the company. They've been very disappointing results. And so the market has wiped out a lot of the share price gain that's been seen previously. So that's the problem when you're dealing with these volatile stocks like the AI stocks, is that they can go up rapidly, but they can equally go down very rapidly. So 33% fall in a week is obviously a disaster for that stock. Teradyne has also had a very bad week. It's down by 4.5%. So I've lost $447 individually on that particular investment. Zoom Communication is up 3.3%, pretty good performance in a week. And Zscaler is up by 7.5%, which if that was the only thing I'd invested into, I'd be delighted with a 7.5% return in a week. And if we look at the overall position, you can see that the sum total of the profit and losses that I've made over the course of the last 7 days is a gain of $6,016 against the original investment of $100,000, which represents an increase in the last 7 days of 6%. Now, you might be sitting there thinking, hang on a minute, didn't you say at the start of this video that you were on for a 2,000% return, not 6%? Well, I am, because 6% is the return in 7 days. Now, if I was to sell all these shares, take the capital back out and put it all into new shares with a new target of 6% per week, then you'll be amazed at how quickly that builds up. So if we look at the calculation, if we're talking about a growth factor of 6% per week, then number of weeks, obviously 52 in a year. Let's just assume trading goes on for the full 52 weeks. So the annual growth factor we're talking about is 20.7 times multiplier. So we're talking about an annual return of 1,970%. So if I start with $10,000 at the beginning of a 52-week period and make 6% return every single week, I would increase the value of my initial investment from $10,000 to $207,000. Now that seems incredible, but that's the sort of return that I'm hoping to achieve. Now, obviously, 6% per week is pretty aggressive and it's pretty impressive, but that's what I'm trying to do. And I just wanted to share this with you because I'm finding the use of this AI algorithm really quite interesting because, as I said, sometimes historically when I was investing, I can get a bit emotionally attached to some of the shares and then hold on to them for too long. Where they keep going up in value, you think, I'll hold on. And then all of a sudden they crash in value. And you think, why didn't I sell those shares when I had the chance to make a huge profit? Working with this algorithm and working with AI basically tells me when to buy and when to sell. So I cleared out my whole portfolio at the end of August. So I'd done very well in August, double-digit return, sold out all of the stocks, and then bought 10 new stocks. And that's what I'm intending to do in September as well. All of these shares will be sold. I will get the capital back and then reinvest it into new shares. Or I may decide that I'm going to sell out some of these before the end of September if the AI program tells me to do it. But at the moment, it's telling me to hang on to these shares, that there's still more growth, there's still more potential, there's still more upside. And I know that's right because last month I had shares that were hitting almost 100% growth within a month. So hopefully you've enjoyed today's video. You've enjoyed seeing how I'm getting on with my AI algorithm. It started off very well. That doesn't mean that it's going to continue doing very well. Obviously with shares, prices can go up and down at any time, depending on external events, internal events. Who knows what might happen with regards to the wider world and the stock markets. But so far, so good. In the first week of trading, the shares are up by 6%, which means that I'm on for an annual return of almost 2,000%. So hopefully you've enjoyed today's video. If you have, then please give me a thumbs up. Please subscribe if you haven't done so already, and I will see you on the next update.